Alright, welcome to this lesson on support and resistance. Basically, I'm not going to go into the basics of the support resistance because I've already covered this in the beginner's course. So I'm just going to go through some of the ways to determine support resistance. Now the first way you can do that is through Fibo. Second way is through moving averages. Third way is through trend lines. Fourth way, round numbers, previous swing highs and lows, candlestick patterns, horizontal support and resistance lines. And the thing is, some of these methods would be quite subjective and some of them would be quite straightforward. So let's go through one by one. The first one is Fibonacci, which I'm not going to cover in detail in this course, but basically you have two types of Fibonacci, which is Fibonacci extension and Fibonacci retracement. So if you are in an uptrend, you want to draw from the bottom to the top. If you're in the downtrend, you want to draw from the top to the bottom. And the key levels are 61.8, 50 as well as 38.2. Okay, these are main key levels that people look at, where the price is going to test and then bounce off from there. Okay, you can see price kind of bounce off from 61.8 level, and also 50 over here, and then 38.2 over here and over here. Second way you can do that is through moving averages. This one I've already explained in detail in the moving average lesson. And then the third way you can do that is through trend lines. It's also considered a dynamic support resistance because it is always changing when the price action changes. And the fourth way you can do that is through round numbers. And why is it that? Because traders and humans have a tendency to think in terms of round numbers, where it is easier to set the target because it's easier to remember as well. So a lot of traders, they're going to set their TP target or stop loss at 0.9000, and hence you see very often price is going to bounce off from here and become a resistance and bounce off from the 000 levels from here as well. You can see that. Okay, so the main key round numbers are the 000 levels and also the 50 levels, which are quite common because it's just easier to remember. And the other way you can do that is through previous swing high and lows. For example, if you have a sell trade over here, you want to look at where's the recent swing low, which is over here. Okay, then you can set your TP target right near the swing low. So better yet, if there's a combination, if the swing low target is also at the same time a round number, then there's a lot higher probability. Sixth way you can do that is through candlestick patterns. And candlestick patterns are basically emotional points, which you can also use them as a support resistance. So for example, if you see a morning star pattern here, when you put a buy trade here, you can put a stop below the morning star pattern. And normally I'll put it slightly below, and then you can set a TP target at the recent resistance or the recent swing high. And the seventh way you can do that is through horizontal support resistance. So a strong support resistance is one that has at least 3 times, has at least 3 test points. For example, 1, 2, and 3 over here. This makes it a very strong support. And same thing with resistance. If it tests at least 3 times, then it is very strong. For example, this resistance over here tests 1 time, 2 times, and 3 times over here, and it broke out. And it comes down and tests 1 more time. So some of the basic principles of SNR you need to know is that SNR zones are a battle between the buyers and sellers. And the thing is, the wider the zone, meaning the wider the rectangle, the higher the margin of error. Okay, the higher the probability of error, meaning that you won't be able to pick exact entry points because the price might retrace into it a lot more. And it's a common area where traders exit and enter a trade. And remember, you draw it as a zone rather than a line. And like I said, the larger the zone, the greater the likelihood of evaluation error. And it's used to identify breakouts from ranging to trending markets. And it's also used alongside with other confirmation indicators and price action. Don't use SNR alone to enter, you need confirmation. Okay, basically SNR levels are levels where traders change their opinions. Okay, they went from buying to selling, selling to buying. So basically you see money changing hands when the price level reaches a support and resistance zone. Okay, sellers can become buyers, buyers can become sellers. Okay, and other functions of SNR, they will also help you determine the strength of the trend. Because for example, if the price tests support many times and bounce off, this tells you that the bullish trend is very strong. Similarly, for bearish trend, when it keep on testing resistance and refuse to go up, but instead it goes down, then it tells you that the bearish trend is very strong. Now this is a support zone over here where I drew at the bottom of the price points, and a support zone is basically a point where the demand would increase at this point. Okay, when sellers push the price down, the demand will start to increase over here, and then the price will go up. Sellers push the price down, demand will increase over here, and then when demand increases, price will go up, and then so on and so forth. So the way you draw support and resistance zone is that make sure you draw a best fit zone where it tests as many points as possible. Doesn't matter if it's testing the body or if it's testing the wick, as long as it is a best fit zone where it tests as many points as possible, then more or less that is okay. And SNR is normally used in a ranging market as well, and when it comes to a ranging market, sideways market, it occurs 70% of the time. So I guess most of the time it will be very useful for you because markets only trend about 30% of the time. When it comes to resistance, when the price comes up here, sellers will start to come in and increase the supply, and hence supply will increase over here and price would be pushed down. Supply increase over here, price will be pushed down. Supply increases over here, then price will be pushed down. So you can see that again I drew the best fit zone based on the points where it touches. And of course, remember that the wider this so-called rectangle is, the higher is the margin of error. So you don't want to draw it way too wide. You want to draw the point highs, okay, at the point highs. Of course, you need a lot of practice to learn how to draw this properly. And you realize that when the price breaks a strong resistance, very often times you see price comes down and tests this again and become a support, as you can see here, before it bounces off. So if you want to trade a breakout, try not to rush in too quickly. Wait for price to retrace, give you a bullish signal, and then you go in from there. Now when it comes to price coming up to a resistance, okay, now over here I drew a resistance line. To illustrate to you something is that you need to see how price approach the resistance, because how the price approach it and how is the market structure being formed is very important. Because when the price comes up here and then it does a U-shaped U-turn or a rounded top just like this, the bearish implications would be more as compared to when the price shoots up and then it stalls there for 1-2 candles before it shoots back down. Okay, for example over here you can see a price shoot up and form almost like a V shape rather than a U shape. So why is this so important? Because when the price comes up and make a U shape, it stalls the resistance line for a long time. It tells you that buyers try to break this resistance many times but then failed to do so, and hence price would retrace from there. This tells you that resistance is very strong. Okay, so a rounded top would have more bearish implications as compared to like a V top just like this. Okay, now some of the factors that increase probability, the more times it tests, the stronger it is, and hence normally if there's more test points, then the longer it takes for it to form. So the longer the amount of time pass, the stronger it is. So if you see a resistance line in a daily chart with the same amount of test points as compared to an hourly chart, which one is stronger? Definitely the one at the daily chart. And the significance of move towards the zone, remember like I told you just now, V shape and also U shape. Okay, so U shape, going out on U shape is more significant as compared to going up on a V shape. Okay, but of course some people will say if the price approaches the resistance line at a very fast pace and it didn't break the resistance, it would mean that the resistance line is very strong. Okay, so this theory can also apply, especially when it goes up and then it forms a U shape before it comes down. What you don't want is for the price to shoot up very fast and then come down immediately. Okay, yes, you want the price to shoot up very fast, form a U shape, okay, and then it comes back down. Then this tells that with the resistance is very strong. Okay, and as well as the duration of the formation, which is similar to this theory. And just understand that a stronger zone would lead to a stronger breakout. When there's a price action confirmation, it will increase the probability that the price would go the way you want it to go. And also when there's a role reversal, so when the resistance becomes support, that line will be called minor support. Okay, it's just a name for it. When there's a role reversal, for example, resistance becomes support, support becomes resistance, high chance there's going to be a correction after the breakout. So you can see over here I drew a support zone, alright, based on these couple of points. Price broke support zone. Do you want to enter straight away? The safe way to do that is to wait for price to retrace, and hence it did, and it kind of gave you like a bearish harami signal, and this is a good chance to enter. So some more your moving average is sloping downwards, and of course you need a lot more moving average to confirm, don't just use one. So when support becomes resistance, this is a strong sign that the price is going to continue to go on a bearish trend. So how about when bearish trend become bullish trend? Now of course I have a resistance zone over here, and sure enough, price broke resistance, formed kind of like a U shape, and then came down, test the support zone, and it formed kind of like a bullish harami pattern. So this tells that you can go in from here. When resistance becomes support, it tells you that this zone is very strong, and hence high chance the price is going to bounce up and then go on an uptrend. Somewhere you see a lot of signs that the trend has ended, your moving average is sloping up, so this is a good place to get it. Okay, so with that guys, I'll talk more about support resistance in part 2. So with that, I'll talk to you in the next lesson. Bye.